So in this video, let's try to understand what really happened to Bitcoin and cryptocurrencies in general. Why did it dramatically jump to $20,000 and out of nowhere suddenly crashed? Remember when Bitcoin just came out? No one gave a damn about it except its true fans, so it was growing slowly. In fact, within the first 5 years, its price didn't even cross $50. Most people didn't hear about its existence, leave alone the technology behind it. But as its price started growing to $100 and above, some investors noticed it, and those who understood its potential gave it a shot and decided to invest. That demand further increased the price, and in the next couple of years, by summer of 2016, it crossed $500 for the first time.
The main currency you've probably heard about is Bitcoin.
Bitcoin, the digital currency Bitcoin, is having...
At this point, the media started talking about it and it gained some popularity. More and more investors realized the potential opportunity to make money, so they threw some cash into it. And within the next 6-7 months, by January of 2017, the price has doubled and reached $1,000. The media quickly spread the message. People all around the world were talking about it. It was the new hot thing to invest. It was like the new internet. In fact, a new cryptocurrency would come out every single day. There were hundreds if not thousands of different cryptocurrencies in the market already, and people were throwing money into them hoping to make a fortune, which further skyrocketed prices. Some investors bought large sums of Bitcoin to artificially inflate the price to attract more people. By summer of the same year, Bitcoin hit a new record. At that moment, celebrities, singers, athletes, even people who had absolutely no idea what on earth is a cryptocurrency decided to jump on the board. This huge demand inflated the price by thousands of dollars, and by 17th of December, it peaked at almost $20,000. And the same thing was happening to every other cryptocurrency such as Ethereum, Litecoin, and so on. Remember all of those people who invested in Bitcoin when it was still under $1,000, and those who artificially inflated the price? They were waiting for this moment. Their investments now worth millions of dollars, so they cashed out as soon as possible. That slightly decreased the prices, which led other investors to panic and sell before prices plummet further. The media quickly spread the news that the price of Bitcoin is falling. That created a bigger panic in the market, since all of those people who invested in cryptocurrencies but didn't really understand how they work were scared to lose all of their investments. So everyone started selling to minimize losses. This oversupply drove the prices down, and in a matter of months, Bitcoin lost half of its value. And since people were scared to invest again, prices started falling over time, and now they're around 3,600. This graph is called the Gartner hype cycle. When a new technology comes out, it's usually only popular among the enthusiasts, but when it gets picked by the media, it blows up because they have to dramatize and exaggerate to get more views. And in a short period of time, it gets extremely popular. That's when everyone talks about how this technology is going to change the world, how cryptocurrencies are going to replace the banks and the entire financial system. However, at some point we realize that we have been too optimistic and we are still far away from that bright future. The technology seems to have a great potential, however, there are still many challenges we have to overcome before it can be truly useful. So that dramatic rise is followed by a sudden, even faster fall. That's where most technologies die. However, if it's a truly useful technology, it will gradually grow again. And Bitcoin is somewhere around here. Whether it's going to make it or not, we will have to wait and see. However, its dramatic rise and sudden fall weren't random, but a cycle that every technology goes through. And if you take a look at the development of the internet, it went through the exact same cycle, but its downfall was way more significant than Bitcoin and resulted in a dot-com bubble. Fast forward to today, after 20 years, the internet has become an essential part of our life. And if cryptocurrencies are going to make it, in 10-15 years, we will see their true potential.